Hi, everyone. Welcome to the Market Talks series of Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. Power companies performed poorly in the first quarter, which is surprising considering that they are defensive companies. What are the reasons for their disappointing performance? Are they just one-offs or are they more permanent? And what power stocks are still attractive to buy? To answer this question, we have the privilege of talking with COL's power analyst, Ching, who will share with us what happened to power demand, the price of power and coal, the reasons for their movement, and specific developments affecting individual companies. So thank you very much, George, for joining us in the show.
Thanks for having me.
Okay, so first of all, I'd like to ask you about the first quarter earnings. So I noticed that except for Meralco, the earnings of power companies were quite disappointing in the first quarter. What was the reason for this?
Well, there were company-specific factors that led to the disappointment in earnings during first quarter. For instance, we have Aboitiz Power and ACEN, who suffered plant outages during the first quarter, and this led to the poor earnings during the period. But there were also industry-wide factors that led to the weakness in earnings during the quarter, like the 21% decline in spot prices during the period. This affected almost all the companies in the sector.
Okay, I'm just curious about the outages you were talking about. They will probably be reversing in the end of the year. What about power demand though? Was it weak during the first quarter or was it strong?
In terms of the overall power demand, the lower temperature during the first quarter of this year compared to last year was certainly the main factor for the lower demand for the first quarter of this year. But if you look at some of the sectors in our economy, like the petrochemical sector or the cement sector, there were industries that were quite weak during the period. So this also led to the overall drop in the overall demand.
So pockets of weakness, but largely due to the warm temperature last
Yes, that's right.
year.
That's right.
Okay. But in general, remains to be seen. So the outages probably will be reversed. And for the power demand, can pick up towards the end of the year if, let's say, the high base effect of last year is eliminated because of the warm temperatures. Okay. So what about the spot electricity prices? What is the reason why they're down, and do you expect them to stay down for the rest of the year?
The main culprit for the decline in the spot prices would be the sharp decline in the coal prices this year compared to the same period of last year. There were fewer outages hours for this year in the first quarter compared to last year. I think for the beginning of the second half of last year, we have huge baseload capacities like the one from the GNPD that came into the system. And for this year, it would be the 1,300 megawatt of San Miguel's Excelente gas plants that came into the system. So because of the ample supply of power, those can be considered as factors that led to the lower spot prices for this year.
So in other words, for the rest of the year, we may, the spot prices will most likely stay depressed.
Yeah, at least, considering there will be, of course, seasonality, but overall, I think the the consensus is that we should see lower spot prices for this year overall compared to last year.
I see. And what about coal prices? Because you mentioned that coal prices are down. I remember in 2024 you mentioned that the lower coal prices led to higher margins. So did this have a similar impact to power companies?
It's the companies that have most of their capacity covered by supply contracts with pass-through fuel costs. They're the companies that are in a better position to absorb the rise or the fall in the fuel or coal prices. But you also have some companies that like SCC, which produces coal and also sells to the bulk of their capacity to the spot market. So with the decline in coal prices, there's a direct hit to their bottom line because of that. Yes.
So SEC is the most vulnerable.
Out of the companies that are in the sector. Yes.
I see. And now let's talk about the latest development or the most exciting development anyway affecting the power sector right now, which is the FGEN sale of the 60% of its gas platform to Prime Infra for 50 billion pesos. So would you say this is a good development or a bad development for FGEN?
For FGEN, I believe that overall it's a positive for first gen. Let's just look at the valuation or the transaction price of the deal. It's from the sale of the 60% stake to Prime Infra. First gen will get 50 billion pesos in return. So if we compare the 50 billion to the current market cap of first gen, that's already like that's already 75% of the company's market cap.
Yeah.
And considering that even after the sale, they will still have 40% of the remaining gas platform. They will also have their existing 46% stake in ACEN. And looking at the individual gas plants of first gen, starting with, let's say, the San Gabriel, their power supply agreement with Meralco ended, I think, February of last year. The biggest plant of that platform, the 1,000 megawatt Santa Rita, that power supply agreement with Meralco will end in August of this year. And for the San Lorenzo, the power supply agreement will end in October of 2027. So looking at the situation and with the expiration of the power supply agreement, there is no assurance that the current earnings of the gas plants can be sustained for the long term. Now, with the sale of the 60% stake to the Prime Infra, which by the way owns the Malampaya gas field, at least in terms of the gas supply or the pricing for the gas that they buy from Malampaya, at least there will be some support from the sale. Yeah, yes.
Okay, so now what do you think FGEN will do with the 50 billion peso proceed? Is it going to buy something, pay out cash dividend, or is it going to do both?
Well, I think the most likely scenario, as they mentioned in their disclosure, the most likely scenario would be that they will use the proceeds and channel it to new investments in the renewable energy sector. They did not mention specifically what projects or what assets they will buy from the proceeds. That we have to wait for the disclosures after the transaction. That's the most likely scenario. Well, in terms of the likelihood that they will give a one-off high level dividend to shareholders. I think it's also possible, but I think the primary focus will still be on reinvestment in the RE.
Yeah. So maybe if they pay out some cash dividend, probably just a small portion.
Or yes.
If there's anything left over.
Yes, that's right.
Okay. But I'm just curious because I think if you look at how the shares are moving, we see FPH going up more significantly compared to FGEN. I mean, what do you think is the reason for this?
Well, all that we can see right now is we have First Vitamin Holdings buying back around, I think, more than 30 million shares over the past week from the company share buyback program. And this is what mainly led to the sharp increase in the share price of First Holdings. Now, we're not going to speculate on why there was such a big buyback for First Philippine Holdings in the past week. I think we just have to wait for the further development on that front.
Yeah, but I think one of the things that you could highlight as far as FPH is concerned is that it's really trading at a very cheap valuation.
Valuation-wise, yes.
Around 3 to 4 times.
That's right.
And I think 0.4 times price to book.
That's right. Yes.
So quite cheap, and it owns like a big chunk of FGEN.
It owns, I believe, 68% of First Gen. Yes.
Okay, yeah. But FGEN compared to FPH has a smaller float, right?
In terms of float, yes, the float is limited. I think currently 11.7%
for FGEN.
Yeah, if investors want to invest in that sector, then it's easier to invest in First Holdings compared to the First Gen's limit because of the limited float.
So, are you still bullish? And what are your top picks for the sector?
While I believe that the spot prices will be will likely be lower for this year compared to the previous years, if you look at the earnings of the company in the sector, I think that's still quite healthy. And what's more, in terms of valuation, most of the companies trading in the sector are still quite undervalued compared to their net asset value. In terms of the top picks for the sector, right now my top pick for the sector would be Aboitiz Power. Strong cash flow, good earnings visibility because bulk of their capacity is covered with the power supply contracts with fuel pass-through provisions. And if you look at the yield, it's the dividend yield is north of 5%. So it's high even compared to the level of dividend that it paid historically. We also like Meralco because of its because of the defensive nature of its business, but because of its overperformance in the past year. Right now, the valuation we believe is closer to fair value.
So not as attractive in terms of valuation. And AP, there was a leak as far as the rules being considered for the addition of stocks in the PSEI index. So that said, what is the reason that they're saying that AP could potentially be added to the index?
Well, the rumors that the rules will be changed. So for you to be included in the PSEI index, which currently stands at 20% public float, it will be lowered to, I believe, 15%. So if and when that rule will be changed, then if you look at the market cap of AP and considering other factors, then the AP will be a candidate to be re-included in the PSEI index.
I mean, maybe you can share with us what's the reason why it was removed in the past. Would you remember?
If I remember correctly, it was removed from the PSCI index because its public float level fell below the 20%, because of if there was a block sale, and it was the block of shares was bought by I think from a family member, so of the Aboitiz family. So that was a reason
Of the opportunity.
because of and they cited the valuation as a reason for them wanting to buy the stake. So so subsequently, since it fell below the 20% float requirement, it was removed from the PSEI index.
Yeah. So for my last question, I'm just curious because in the past few years, ACEN has been very popular among our investors, especially given its renewable energy platform. And you've always had a hold rating because the stock has been expensive. But the price has gone down a lot, but you still have a hold rating. So maybe you could share with us why you have a hold rating. Like what are your concerns, especially right now, given that oil prices are going up because of escalations in geopolitical tension? Wouldn't it benefit, ACEN?
Okay. So my immediate concern right now would be obviously the stock rights offering that they announced. The company announced that they plan to raise 30 billion pesos from the final price has not been announced yet, but there's going to be a floor price of 230 per share. So I believe that in the short term, there will be a bit of an overhang because of that pending SRO. So I think my advice would be just to wait for this SRO to conclude. Then after that, I believe the focus will be solely on the valuation of ACEN, which based on my forecast, it's already at a very undemanding level in terms of valuation at this point.
So with that, thank you very much, George, for your thoughts on the power industry and your outlook and your best ideas for the sector. Thank you so much.
You're welcome.
That's it for this episode of this Market Talk series of Intelligent Investing. If you found this discussion useful, don't forget to like and subscribe for more market insights. And remember, stay sharp, stay selective, and as always, invest intelligently.